Hey, good morning, everyone. Welcome to the morning brief. Today is Thursday, March 28th. It's actually the last trading day in March because tomorrow is Good Friday, and in the U.S., markets are closed. So we have no morning brief tomorrow. We have a day off. So you got to take that day off and say thank you very much and take a day to spend out in the spring weather. That being said, what's going on today? So today, on the 28th, last trading day of March, we've got final GDP, which just happened, 3.4% better than expected. You know what? This is not good news. Normally, GDP going up means the economy is expanding. However, we are concerned about inflation and the Fed raising rates or lowering rates, and this adds ammunition for the Fed to not raise, I should say, not lower rates, and therefore continue this era of higher interest rates, at least for the future, the foreseeable future. Unemployment claims came in better than expected. Again, letting us know that even though interest rates are high, the Fed is trying to pump the brakes, that unemployment is not having any of it. Okay. Final GDP price index was as expected, 1.6%. 9:45, we've got Chicago PMI, and then at 10 o'clock, we got a bunch of stuff: pending home sales, revised University of Michigan consumer sentiment, and revised University of Michigan inflation expectations. All at 10 o'clock. 10:30, we have natural gas storage. And that is it for the day. And welcome to the long weekend. So, yeah, it is what it is. So, daily chart. We had 3 days down. I forgot to say this yesterday. I remembered about 10 minutes after I did the recording. But we had 3 down days. Remember, the market loves 3s, 5s, 7s, and 12s. Those are very common patterns within the market. We had 3 days down. Good probability that yesterday was going to be an up day. So anyway, I think we could definitely test the highs for no good reason, but especially not considering GDP. Yeah, it's because I'm going to say 53.50 is probably a pretty decent round number we could go to if we can break above that high from about a week ago. Where can we go on the downside? Easily test the low from the day before yesterday, 52.60, or even 52.53, certainly within reach. Yeah. So what do we got on the inventory side? So we had a big day yesterday and big inventory. So correlated, yes, nothing to worry about other than we are at nosebleed levels and continue to defy gravity. Again, you trade what you see, not what you think. Kind of interesting, before the announcement here for the GDP, the overnight action was about 7 points. That's like extremely low overnight volatility. Even with the GDP coming in, we only added 4 points. So that would be 13 points of overnight action. That's just unbelievably benign, very, very low. Average overnight action is somewhere between 20 and 22 points. So, yeah. So initially, you would think the GDP number was good news, because it is. It means the market and the economy is just cruising on. And the event, initially we went up, but then they start going, oh, wait a minute. GDP going up is bad because the Fed is not going to lower interest rates. So, of course, we came right back down to where we were before the news announcement. Yeah, it is, again, trade what you see, not what you think or what you believe. So what else have we got? Stock Traders Almanac is at 42.9, 42.9. So a negative bias today from the Stock Traders Almanac. That's all I've got for you. Remember, no market brief tomorrow. Also, no trading tomorrow. Globex session will be open, but very, very thin trading. I don't recommend traders trade during holidays trading. We'll see you Monday. Hope you have a wonderful long weekend and happy Easter. Hey, thanks for watching the morning brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.